For more on inflation and what it might mean for your money and the markets, let's bring in Piper Sandler's Managing Director and Chief Market Technician, Craig Johnson, and StoneX Chief Market Strategist, Kathryn Rooney Vera. Craig, I'm going to start with you because you're one of the few out there, technicians or otherwise, who kind of got it right. You've nailed multiple rallies over the 15 years or so that we have been talking about. What does your sort of technical crystal ball say to you, maybe not just about rates, but about the stock market at large?
Well, stock market at large, Brian, this is a market that's at the upper end of an 18-month price channel. And whether you're looking at the S&P, the NASDAQ, or the Dow, we're at the upper end. This is not where you start another leg higher. I've been very clear that I think that the next move in this market is lower, not higher. And we've been sort of putting about a 5 to 10% sort of band around that. And Brian, to your point here about inflation, it's really crystal clear. Just take a look at the chart of this CRB index this evening, and you can see those are the major commodities. You got majority of it is oil, but it's going to include a lot of other commodities. You're reversing a downtrend for the first time since mid-22. And at this point in time, that clearly is more inflationary. And Brian, to the point you made about bonds, take a look at the 10-year bond yield. You're just at a point in time we're about to break out. If we see a move above 433, you could probably see about another 50 basis points higher before it can sort of run out of steam. So there's no question that the Fed's got a unique challenge on their hands at this point in time, as the inflation battle is not done.
Yeah, Kathryn Rooney Vera, would you agree that, you know, the pace of inflation is down, but the battle may be won in the short term, but it doesn't look like the war is over, and that could change the Fed's thinking?
Yeah, that's right. And I agree with Craig in many senses, primarily because the Fed is unlikely to be able to cut with inflation still running hot. Yes, it's moved lower and markedly lower, but we're not quite at trend 2%. We don't have to hit 2 and bounce back. It's a trend 2%, which is the goal. And with these recent economic data, from economic growth to still pretty robust retail sales, although we saw a deceleration there, to inflation prints from PPI to CPI to core PCE. The housing market hasn't really rolled over quite yet. Consumption remains strong. The Fed can't cut in that environment. So I think we're lucky if we do get a cut in June. As we get closer to the election, it gets a little more complicated. Next week, we get the Fed meeting. We're going to get the SEP. We're probably going to get, I suspect, a downward move in the dots, which means that the Fed is more likely than not going to be implying 2 25 basis point cuts this year rather than the 3 they previously had.
Said maybe a different way and sort of more plain speak, if you will, Minneapolis style, Craig Johnson, which is if it looks like we will not get a rate cut this year, and we could still, but let's say it becomes more apparent or the bets are that we may not, does that mean it's possible that the stock market, the S&P 500, has topped out? It's made its highs for the year?
Well, Brian, that fits right in with sort of an HLTR, or the high-level trading range, Brian, that we've been discussing. This is typically what you see in election years, and it is also something we very well could see. If the Fed isn't going to cut, small mid-cap stocks are going to struggle. These large-cap stocks and playbook that have been occurring over the last 18 months probably gets a little bit more back in vogue. And from our perspective, I think you got to sort of keep playing this right down the lines of, think about the Microsofts, think about some of those names, think about the banks. Those are companies and areas of the market that could do well if the Fed is going to stay on pause here for a while, from our perspective, okay? Because the banks haven't really done well for a while. And Microsoft is still trending very well. But these small mid-caps could be a little bit more of a challenge, Brian, clearly. And lastly, I'll just say, if you look at the world interest rate probabilities, the odds of a rate cut clearly are falling, but it's moving out. It now looks like September is when you can see the first cut. That's the highest probability from the May-June timeframe, which people originally thought.
Wow, amazing. Guys, we got a lot of news tonight, so we're just going to leave it here. We'll get you both back on soon, Kathryn and Craig. Thank you both very much. Quickly, let's take a look at your money and what happened today. Markets declined across the board, but not a lot. Again, 0.3%. Inside